I'm Anthony Smith with HFG Trust, and this is the Chart of the Week video. Hello and welcome to the Chart of the Week video. This week we have three charts, so let me jump into it. And I will say that, some weeks I have to dig a little bit to find something that's interesting to share with all of you, and then some weeks it just lands in my lap, and this is one of those weeks. Chinese company Evergrande became a household name last week, and it was even fingered as a cause for the S&P's recent sell-off of about 4%. I would argue that stock markets just need to blow off steam every once in a while. We haven't had too many speed bumps since March of last year, so if Evergrande is going to give investors an excuse to take some chips off the table, then so be it. As of this taping on Thursday afternoon, it looks like stocks have recouped a little more than half of that recent sell-off. So have fears of an Evergrande collapse and contagion been overdone? Can we put it in the rearview mirror now? I wouldn't take my eye off of it just yet, that's for sure. What is Evergrande anyways? Well, it is China's largest property developer and home builder. Just how big? Well, one way to kind of gauge magnitude is to look at how much debt it has outstanding. This company has about $90 billion in debt outstanding. That makes it, that's 2 times more than what Walmart has. So this is big, and there are estimates that it has pre-sold 1.4 million homes in China worth about $200 billion. The problem is these homes, they haven't been completed yet. So the money has come in the door, the homes haven't been completed. That's a problem. So this is a company that is in a world of hurt. Let's look at the bond prices. So what you're looking at here is a 1-year look back of the bond price of one of its bonds that's maturing in the year 2025. So for a bond maturing in 2025, you would want that bond to trade at about 100 cents on the dollar or par, because that's what you're going to get back at maturity if it's paid back. These bonds are trading at 28 cents on the dollar. Bond investors expect a default. And I had to laugh because I read that one of Evergrande's executives said they might just go ahead and buy back some of this debt at a discount in the open market and retire it. This is an old, I worked in junk bonds for 11 years. This is an old tactic that executives of firms that are teetering on the verge of bankruptcy will use to sort of convey a false sense of strength to investors. This house is burning. Everyone can see it's burning, and this guy's standing on the doorstep saying he's going to buy back bonds. It's not going to happen. It never does. Could there be contagion from this? So, as you think about that, you look at previous contagions, and it is sort of fascinating to study how the dominoes will fall in these types of situations. In this case, Evergrande, it's a huge company. It's embedded across China's economy, and especially in real estate. And China is a country that's very dependent on the real estate market for jobs and growth. So a collapse could chase away investors in other property developers, and that could set off a string of defaults. It could scare away anybody looking to buy property, and so that would obviously have a negative impact on pricing. And the reason that's really important is because lots of the loans issued by corporations and governments in China are collateralized by real estate. So that would have a severe impact. That's not happening yet. So could Evergrande fade from the headlines in the coming weeks? Yeah. But it does seem like China has some rather inflated home prices, and this is The last table or chart that I'm going to share with you, and what this shows is home prices in major cities across the world as a multiple of median family income in those cities. And let's start at the bottom there. San Francisco is a name we know, and depending on where you live, it seems to me, sitting in Eastern Washington, that home prices in San Francisco are elevated. So what that 8 means, the 8.0, is that if the median family income in San Francisco is $100,000, then the median home price would be $100,000. That's just to sort of illustrate how these numbers work. So as we get to the top there, those top 5 cities there are all in China, and those multiples, I think that home prices in San Francisco and New York are insane. I'd have to come up with a new word to describe what's going on in China right now. So that's it for this week. Thank you for watching. We'll see you next week.